Okay, that's moving on to, where is it? Page, okay, I told you to go through, but I know you must have gone through the way. So the first question there, page 160, company's account.
I discovered that we didn't have that one. I didn't see it in your mail, so we couldn't really
Okay,
that company.
Well, did you print it out? No.
No, we didn't see it.
No, I mean you. Did you see it? Were you able to print anything about it?
No.
Okay, no while let me run it. And let me bring it in. Okay. Listening.
Yes.
Okay. So let's now continue the analysis. So with this, the first question there, which is example 22G on the textbook, Guides to Principles of Accounts. XYZ Limited manufactures toys, Its authorized share capital is 800,000, made up of 600,000 ordinary shares, £1 each. It's 400,000, 3% preference shares of 50 kobo each. During the year ended 31st December 1999, the following balances were extracted. So these are final or financial statements. So were extracted from the financial record of the company. Issued and fully paid capital at £1 each, 3%, and so on. Moving on down to A, B, and so on. This person ignored trading profit and loss account. That means that must have been prepared before arriving at net profit, because net profit is found in profit and loss account. Okay. So the right thing to do now is profit and loss appropriation account for the year ended 31st December 1989. So in that question, there is net profit somewhere up. Net profits for the year 80,000. Have you seen that?
Yes.
So we'll credit it because that is an income. And all expenses incurred by the company will be debited to the profit and loss application account. One of them is proposed dividends. You are aware, because the company has made profit, the company will pay dividends. And that dividend the company will pay is an expense. So proposed dividend, ordinary share is 20,000. How did you arrive at that? The question says provision is to be made for preference share dividend. You know, preference share dividend is 3% preference share. That means preference share has a fixed dividend. So 3% of preference share. Remember, preference share is 100,000, have you?
Yes, yeah.
So 3% of 100,000 naira is 3,000. Ordinary shares, they decided on how much they will give them. The directors recommended ordinary share dividend of 4%. So 4% of 500,000 will give us 20,000. Is it clear?
Yes.
The next one is goodwill written off. You know that goodwill is the reputation made in the business. And according to the question, goodwill was 20,000. And the question made us to understand that goodwill was written off for over 4 years. That goodwill will be as if we are writing the depreciation down. So if you look down in the book, you will see notes 2. Goodwill was written off. You will do it as if you are doing depreciation. 20,000 was a goodwill. But for over 4 years, we divide by 4 years as if that is depreciation. Goodwill written off is 5,000. Is it clear?
Yes.
The difference, that's the last one. The income is 80,000. The expenditure incurred by the company is 28,000 naira. So that's 8,000 naira. Take it away from 80,000. We'll have 52,000. We'll call that balance carried down to next year. That means that's the balance that will serve as a reserve in the financial position of the company or the balance sheet. So the next thing is to prepare the balance sheet. From what I taught you before, we agreed that in the balance sheet, whether you are using T form or vertical method, there will be authorized what? Capital. Authorized capital in this case will be on the left-hand side. or it will be down, 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 down. After you must have written fixed assets, non-current assets, current assets. That means you are adding working capital. Then you will now be financed by authorized capital, issued capital, before long-term liability, a reserve, and then long-term liability. That's so authorized capital in the question. The question says that 600,000 was the authorized capital. So 400,000, sorry, 400,000 was authorized capital. 600,000 was ordinary share. So, all right, authorized capital, 600,000 ordinary shares of 1 naira. From our knowledge of issue of shares, 1 naira times 600,000 is 600,000. 400,000, 3% preference shares of 50 kobo each. 50 kobo times 400,000 will give us 200,000. Abi?
Yes.
That means that knowledge of issue of shares is also very important to know how to prepare this. So we add it together, it becomes 800,000. We close it. You can see that I've drawn 2 lines showing that authorized capital is written as a note. Note. So 800,000 gone. According to the question, the next thing is issued capital. Remember, these shares were issued at 1 naira each, that give us 500,000 in the question. These shares were issued at an amount of money at 50 kobo each, that give us 100,000. So all we need to do, the first one is 1 naira. How many 1 naira and 500,000? 500. So right, 500,000 ordinary shares at 1 naira each. 1 times 500 is 500. For this other one, 50 kobo. How many 50 kobo in 100? That will be 50. Sorry, that will be 200,000 if we multiply. 100,000 divided by 0.5, that will be 200,000.
Yes.
So 200,000 preference shares of 50 kobo each. Multiply, that will give us 100,000, giving us 600,000 as the issued capital. You will not write issue capital as a note. You will not close it because it's part of what we are going to use to run it to the end. But the authorized capital, close it. We will use that. The next thing is reserve. Whether you call it revenue reserve, whether you call it capital reserve, whether you call it anything, but they're under the heading reserve. The first reserve in this question was general reserve. You look at the question, that was under preference shares, 30,000. We'll put it there. The profit and loss, is that balance carried down to next year, to 2,000? Have you seen it in the profit and loss operation account? So that is our reserve. Because when they make profit, they keep it. And especially sometimes where it's not yet time to distribute it, they keep it. Long-term liability, which is the debenture in this case, they had a debt, they had a borrowing of 5% debenture, 20,000. And it's in the question also, the debenture 5%. That means interest that is payable on debenture is 5%. The next one is long-term liability. Okay, the next one is current liability. We have creditors. You are aware that creditors are current liability. The next one is proposed dividend. Remember, this dividend is about to be paid, so it's a debt. And that is why the proposed dividend written in appropriation account will be transferred into the current liability as 23,000, the 2 of them. That's all for the left-hand side of the balance sheet. The right-hand side is fixed assets or non-current assets, as the case may be. Land and buildings, we have 517,500 is in the question. We have no depreciation for that one. Furniture and fittings, less depreciation. There was depreciation in the question. Where is it? We have furniture and fittings at cost, 25,000. And the questions was calculated with depreciation of 2.5. Let me see. 25,000. Provision for depreciation. Furniture and fittings is 22.5, Abi?
Yes.
So we less that. And the one for motor vehicle was 16,000. We also less that. And goodwill is also an asset, or is an intangible asset, or is an asset. So you include it. Goodwill is 20,000. And it was written up, goodwill written up as if it's depreciation. You less. And you have that 15,000. The next thing is current assets. You have stock, which is the closing stock in question. Hello? Okay. Which is the closing stock in that. You can see the current written stock as at 31st December 1989. So this stock wasn't opening stock because this account is prepared as at 31st December 1989. So being the stock at the end of the period, at the end of the year, it's closing stock. There's no opening stock here at all because opening stock must have been used in the trading account before arriving at gross profit and later net profit. So stock 25,000. There is debtors in the question 50,000. There is cash at bank 40,000. There is cash in hand 1,000. At the end of the day, you add it together.
Yes.
The two sides will like. Any questions?
I think I'm okay. Yeah, I'm there. Yes.
So we'll take the last one there. The last question that runs from trading profit and loss account up to balance sheet. This one has the following trial balance was extracted. This is in the trial balance. The other one wasn't in a trial balance, just list of transactions. Now for trial balance, we have authorized capital, paid up, this, that, go on with additional information, closing stock, which we know. But there is a statement there which we will interpret, which says a furniture item which costs 5,000 naira on 1/1/1983 was sold for 4.5 on 31st December 1990. Remember that 4.5 is a disposal value, have it?
Which of them?
Or residual value.
Yes.
So the profit or loss on disposal had not been adjusted in the books. No depreciation was to be computed in 1990 on the assets disposed of. Additional provision for doubtful debt, so on and so forth. So the one says you are required to prepare trading, profit and loss account, appropriation account, and then balance sheets. Balance sheet as at that date. Balance sheet as at that. So we'll start. The first one is normal. Vivid Limited trading profit and loss account to balance sheet. We are aware there are two stocks there. The one in the trial balance is opening stock. Add purchases, which is in the question. Less closing stock. There's no more name. Sales on the credit side. It's in the question. The sales there. The sales, there's policies and sales there. The first one is policies. Second one is sales. So we'll put that and we'll get gross profit 115,000. We'll transfer the gross profit to the credit side of profit and loss account. Debiting all expenses. One of them is profit on sale of furniture. See note 1. Open to the next page. You will see the double entry principle applied before arriving at the profit. Are you seeing furniture account?
Yes.
So the asset was bought. The assets, because asset account are always debited. Asset are always debited. So the asset for furniture is 40,000 naira. If you check the question at the beginning, Furniture on its own. Furniture alone. We check furniture alone. Furniture alone is furniture alone. Furniture and fittings at cost is 40,000. So that's an asset. So we debit the 40,000. That's what I did there. Then value of furniture sold. Value of furniture sold. The furniture that was sold was well, how much is that? 4,500 was sold anyway. 4,500 was sold for us to get 30-something thousand. But let me just look at it. That was depreciation, but we sold 4,500 anyway. The question there is 4,500. Let me see why it was that. Okay, value of furniture sold. I know it's 4,500. The difference, we'll get to understand. The difference should be 40,000 minus 4,500, and that should give us 34,500. Yeah, let's leave that one. Let's go know furniture was sold, and that is 40,000. I'll find that. Provision for depreciation. The asset that was sold has to depreciate in value. Depreciation of sale of furniture was 1,000. Look down. Depreciation of sale of furniture. The asset that was sold. Okay, that should be 5,000. Let me see where that 5,000 is. Somewhere. 5,000. Okay. 5,000. Okay, let's move on. I will find out that because this is 35,000. So furniture is 35,000. So automatically, what was sold here was just 4,500. Yes. Look at
4,500. Yes. Yes,
no.
I can see it.
Look at where it is. What is it called?
Okay.
A furniture item which cost 5,000. Is it clear now?
Yes.
So that place should be 5,000, not 5,500. 5,000. So the value of furniture that was sold, are you with me? The value of furniture that was sold, the whole furniture was 40,000, but there is a value that was sold. And that value that they sold that gave us scrap value of 4,500 is 5,000. Take away 5,000 from 40,000. That's how I got at 5,000. Is it clear?
Yeah. Well, that scrap value, how do we come about the scrap value? Is it given to us here?
No, it was given.
Okay.
I will show you. But let's just look at
the 5% per annum. Okay, that's the depreciation.
Yes, but let's look at this first. Let's look at this first so that you can understand. Now, our furniture originally is 40,000.
Yes.
What we sold out of that 40,000 was 5,000. Because the person said that the furniture value 5,000 was actually sold. So we want to remove so that we know the remaining value of furniture. So what we sold was 5,000. Take away 5,000 from 40 is 35. So ignore the 2 zeros, the 500 there is 5,000. So that's how we got 35. Now, provision for depreciation in the question. Depreciation of sale of furniture. You know that depreciation is a loss, and all losses must be debited to the depreciation account. So depreciation account is expenses and it has to be debited. Now watch. In that question, value of sale of furniture. Look down. Depreciation on sale of furniture. 5% of 5,000 is 250. And this assets lasts for 4 years. You know how I got 4 years? Check down. in the original question, letter B, a furniture item that cost 5,000 on 1186 was sold for 1186 was sold for 45 on 31st December. From 86 to 90, that should be 4 years, Abi.
Yes, 86.
70,
Yes.
that's 4 years. So, and that's why depreciation will be calculated, multiplied by what? 4. So that depreciation of assets sold was 1,000. Formally, in the question, additional information, I believe, additional information, no, in the trial balance, there is provision for depreciation. Furniture and fittings was 2,000, Abi.
Yes.
So we'll put the 2,000 on the credit side. The difference is balance carried at 1,000. That one is stable. The next one is the furniture disposal account. That asset that was disposed, from that furniture account on top, there is 5,000. For every credit entry, balance brought down of 5,000, right? Depreciation on sale of furniture, which is on debit side of provision, will be credited. Profit and loss. You will agree with me that there was a cash, Abi. We sold the asset for 4,500, Abi.
4,500, yes.
So when you sell, part of the sales is an income, we have to credit. I know that cash book will be debited. So the cash book as account as receipt, and for every debit entry, the furniture disposal account will be credited with 4,500, and that will give us 5,500. Are you there? Then you take away 5,000. You know that the original assets was 5,000, Abi?
Yeah.
Assets that was actually disposed, the value is 5,000. At
5,000,
the end of the day,
yes.
what we sold it, everything gave us 5,500. So that 5,500 is bigger than 5,000. That means there is a profit of 500 naira. And it is that profit we included at the credit side of profit and loss account as profit on sale of assets. Is it clear?
Yes.
Good. Accumulated depreciation will come to that, but accumulated depreciation is 1,000 naira in this original question. Then 5% of 35,000, which is not the original value of the assets, will be 1,750, and the accumulated is 2,750. But we'll use that in the balance sheet. So we'll go back to where we stopped. Profit on sale of furniture, 500. That one is settled. And all expenses in this question, we're looking at them one after the other. Let's just take it gradually. Capital reserve, share premium, furniture. You know, when you look at transaction like that, you do not commit error of omission. The first thing is bad debt with debited. The next one is rent. Rent is an expense, rate, insurance, salaries, and wages. We'll put all those: bad debt, rent, rates, insurance. The next thing is salaries and wages, which we have debited. Electricity, you debit. Postage and telephone, you debit. Still from the trial balance. Directors' remuneration, that is salaries and allowance, you also debit. Policies and sales, you know, we have used that. Sale of furniture, that was what we used before. Administration expenses, you debit, which is an expense, 500 naira. The next thing is carried out towards, you know, is an expense, you debit. Bank, that will be for balance sheet. Audit fees will also debit. Cash is for balance sheet. Profit and loss account is also for balance sheet. Bank loan, that should be for long-term liability. Provision for doubtful debt was 1,000 in the trial balance. Then looking at the additional information, the question has written somewhere there, provision additional provision for doubtful debt is 500 naira. In the trial balance, it was 1,000. In the additional information, it was 500. That means there's a decrease, Abi.
Yes.
There's a decrease. Sorry, there's an increase, Abi.
No, it decreased.
I'm coming. It seems the value is quite different. What is here? The 500 you are seeing here should not be what is there. Should be either 1.5. Let me check the balance sheet and know whether the 1.5. Okay, can you see it? Can you see the balance sheet as 1.5? And so help me change that, please. C is doubtful debt 500, because if it's 500, it should have been a decrease. So it's 1.5. So from 1,000 to 1.5, there's an increase in provision of a doubtful debt of 500. Is it clear?
Yes.
Good. Now, the next one is now depreciation, which is a loss. All depreciation, there is freehold premises. According to the question, provision for depreciation on the straight line method is as follows. Freehold premises, say 10% per annum. Our freehold premises in the question is 120,000. 10% of that, which I believe is 10% of 120,000. That should be 12,000, Abi.
12,000. Yes.
5% of per annum is 175, 1,750. How do we arrive at that? You know, after the value of the assets was sold, the assets value now remain 35,000, Abi.
Yes.
So 5% of 35,000 is 1,750, Abi, which
yes.
I showed. The 5% of 35,000 is 1,750. We check the back, and that 1,750 is our depreciation for the year ended. You know, there was another 1,000, which will be added together to be used in the balance sheet. So which we got 1,000 before, but that one will be accumulated. So where is it there? Furniture between 1,750. For motor vehicle, that is 20%. So 20% of motor vehicle. Motor vehicle is at cost is 90,000. So 20% of 90,000 should be 18,000. Is it clear?
Yes.
The difference, as usual, the income is bigger than the expenditure. Wow, net.
Sorry, when you value, maybe for instance, you value an asset.
Yes.
Is it that we have to, and maybe the cost of the assets, for instance, is 20,000.
Okay.
And we value that asset for maybe like 2,005, for instance. Are we adding the cost of the amount that we've used to value the assets to the actual cost of the list, or we are subtracting it from the actual cost? I don't know if you understand what I'm saying.
But if I try to understand, if the asset is 20,000, are you there?
Yes, that's the cost.
They value it for 2,000. Is that what they're saying?
Yes.
But remember, in this kind of question, it's quite different. What actually happens is that a company has an asset, say 20,000. Then I say that part of that assets of 20,000, we want to sell some. We want to sell that one that is valued for 2,000. So that means because we are selling 2,000 old, it means our assets will not be 20 again. It's not going to be 18, Abi?
Yes.
Because we are subtracting. So by the time we value, we'll be able to know whether we made a profit from this valuation and disposal of the assets or not. If we make profit, we'll credit it to profit and loss account. We will make loss after preparing what we call furniture disposal account. You'll be able to and know whether I'm making profit or not. But definitely, when an asset is 20, and the one that is valued 2,000 among that 20,000, we may have various assets in the company, but there's one that got to 2,000 that we want to sell out. Definitely, our value of the assets will reduce by that one we have valued for 2,000 to be disposed.
Okay.
Is it clear?
All right. Yes, it's clear.
Okay. Now, from the profit and loss operation account, we take our net profit to the credit side, 14,400. Is that okay?
Yes.
In that question, there is another profit and loss account. This one is net profit from profit and loss. There's another profit and loss as at beginning of 1/1/1990. In the question, trial balance down 58,600. We'll credit it because it's profit and loss brought down. Part of reserve that we'll continue with in the appropriation account so that we can get total reserve in the balance sheet. I hope you understand that.
Yes.
Because the one we did before, we have balance carried down to next year. And we had a profit and loss that we put under reserve. Now the question is bringing in that reserve in the trial balance, letting us know that there is something they have there which we are adding to net profit so that we can arrive at a new reserve, which is balance carried down to next year. As usual, there is interim dividend paid. Companies as they run the affairs of the company, they could make profit during the year. I don't want to pay the dividends by the end of the year or at the annual general meeting. They may decide to encourage the shareholders by paying what we call interim dividend, which is temporary dividend before the real dividend is paid. So interim dividend was paid, which is an expense to the company, 3,750. Is it clear?
Yes.
That was given in the question. Interim dividend paid. Where is it again? Interim dividend paid. Interim dividend of 5% of ordinary shares. The trial balance beginning 3,750. The next one is the proposed dividend. Dividend to be paid. It's also an expense because when we pay it's an expense. Ordinary shares was 1.5, I believe. The directors has recommended 2%. Directors propose a final dividend of 2% on ordinary share and payment of dividend of preference share. So all of them is 2%. And from all indication, 2% of ordinary shares, let's see the paid up capital, take note, 2% of that should give us 1,500. Is it clear?
Yes.
Okay. Then preference shares, they also say it should be 2%. And our preference shares in this question is 24,000. 2% of that should be 1,200. 1,200. And transfer to general reserve. Transfer to general reserve is written somewhere there. Yes, F. Transfer 40,000 naira to general reserve. That one is there. That is 40,000. So when we say transfer to general reserve, this is the amount of money the company decided to pay their directors or as dividend, whichever one, but it was rejected. Because it was rejected, the company will put it in a reserve so that when time comes to use it. So that's why I say transfer to general reserve. At the end of the day, the credit side is more than the debit side. And the difference is 26,000. Any question?
No, it's okay.
In the balance sheet, which we just did some few minutes ago, let's still run it. Authorized capital, according to the question, is 150,000. Is there authorized 150,000 nice shares of 50 cover each to give us 75,000, 400,000, 5%, cumulative preference shares of 60 cover 60 times 40. We'll close the account. The next thing is issued capital. 150,000 was still the same. That means the issued capital in this case is also the authorized capital according to the question, because you saw on top as the heading, authorized, issued, and fully paid capital. So that means the two. The issued capital was also the authorized capital. So we write the same thing and close 99,000. Reserve. Capital reserve in the question was 6,000 naira. Capital reserve was 6,000 naira. Where is it? Okay, capital reserve 6,000. Share premium. There was share premium in the question. Already you know what is share premium. That's 10,000.
Yes.
General reserve that was transferred is now 40,000. Profit and loss we got in the appropriation is now 26,000. The next thing is a long-term liability. There's bank loan in the question, 36,000. Still on the left-hand side, current liabilities, we have creditors, which was given in the question. Proposed dividends in the appropriation account, addition of the two is 2,700. We move to the right-hand side, fixed assets, freehold premises, 120,000. Less the depreciation that we know very well as 24,000. What does that mean? There was 12,000 before in the trial balance, provision for depreciation. Freehold premises was 12,000. Plus the current 12,000 were recorded in the profit and loss account, making 24,000. Furniture and fittings of 2,000 added to give us 2,750. Remember, there was 1,750 in the trial balance, plus the 1,000 that we had, because after the assets have been sold, the depreciation is gone. What remained from that one was 1,000. The depreciation was 2,000, but whereby the new asset we sold was depreciated for 1,000. So the 1,000 will be taken away, the remaining 1,000 as the previous depreciation, plus the current one of 1,750, that gives us 2,750. Remember that furniture and fittings was disposed, and that's why it did not retain the original value that was traveled. But motor vehicle wasn't sold, it's 90,000. The depreciation is 36,000. What was in the trial profit and loss was 18,000. In the trial balance, 18,000 was also for motor vehicle. Addition of the two is accumulated depreciation of 36,000, giving us 54. Are you following?
Yes.
Okay. Now we have current assets. Closing stock, which you know, 30,000. Bank, 40,000. Cash in this question was 300 naira. And there is debtor in the question. Debtors is 50,000 in the
50,000.
question. So you less provision for doubtful debt, the one outside the trial balance, which was written there as 500 instead of 15, is what you less from debtors as 48,500. When you add the two together, you have 3,301 301,000. Is it clear?
Yes.
So that's how to sort out that. Well, with those two examples, I believe the company's account, at least the understanding should be clear.
Yeah, and also, sorry, there are some situations whereby they give us maybe look for administrative expenses, then what they call administrative, then there's another one they gave, I think about 3 of them like that, then financial expenses. And
Okay.
yes, I think so. Yes.
I guess financial expenses is an expense, Nabi. And it must be debited to profit and loss account.
And also this distribution expenses.
Yes. Any expense, whichever name it is being called, must be debited, except if you have what we call preliminary expenses. Preliminary expenses. This is the type of expenses incurred by a company when they are about to register the company. Are you following?
Yes.
This type will go to appropriation accounts. It will not be in profit and loss. Is that okay? Appropriation account. So that is the only expenses that will be debited for profit and loss appropriation account. But any other expenses should be normal expenses that should be debited to profit and loss account. Is it clear?
Yes, it's clear. It's
So,
okay.
That means from a partnership, from income records, from receipt and payment income and expenditure, company's account, single entry bookkeeping, this should be able to do a good job as the exam approaches.
Yeah.
So any other question on how we have treated, except you want, we should do finance or any question for the accounts, yeah?
Well, so far, no, I think I'm okay with the accounts. I'll couple with my extra effort also. I think I'm okay with all the explanations.
Okay. Finance income.
Yes, finance. I think maybe if possible, like maybe you have to go like that beginning. That just
for
kind
accounts.
of
Is it accounts or finance?
No, finance.
Okay, that beginning again.
Yes, I'll go back again and just a kind of overview of everything.
Mathematics of finance.
Mathematics of finance, yes. And,
okay. So for accounts now, we are done, Abi?
Yes, I think I'm okay.
Good.
But if there is need to ask any, I will let you know.
No, you are free. You are free to ask